Housing crisis 2.0? What in the world is going on? What's up, everybody? Welcome back to another week, another episode with your one and only Kenny Simpson. And this is The Brief. And this week, I've got a story for you that just happened, which is great, but we got to jump into it. Let's not wait. What's going on out there? I can tell you what's not going on is we ain't getting any listens. We ain't getting nothing, as they say. All right, so let's jump into it. 2319. All right, we went up from 2205, so we are growing. We got over 100. Woohoo! Pending 443, new listings 473. We're getting more and more. Not even close, guys. It should be 4,000 or 5,000. That's terrible. Remember, we're basing this. This is the lowest from the lowest. This isn't the lowest from the highest. Like, we're usually 10 to 12,000 on the average listings in San Diego. I just said we're at 2319. Problem. Rates are up a little bit because of the debt ceiling. I think there's a little bit of fear in the market with the debt ceiling. Also, is the Fed gonna raise again? I don't think so. Based on Jerome Powell's speech, yes, everybody's, there's all these hemming and hawing on CNBC and all these lovely politicians and money managers and economists and all this giving their thing, but their predictions, but I think we're done. I think the Fed's done. Inflation is coming down, which we're going to talk about next, but rates are up a little bit because the debt ceiling crisis. They've got 9 days to figure this out, which is not good. Of course, they waited till the last minute like usual. It's like, your midterm papers due on Wednesday and you haven't even started. That's kind of where we're at. So they're gonna have to pull some all-nighters, pull something out of their ass. So no Memorial Day weekend for you guys. You guys are sitting in those chambers or wherever you sit, getting to work, and good thing that we rely on all these people to manage our money for the country because they do such a great job. Also, debt ceiling, inflation, recession. What is going on? Well, inflation is definitely coming down slowly. Is there a recession? The joke was for the last 18 months, we've been saying there's a recession coming in 6 months. I don't know. But when we get there, we get there. I think the recession will get some slowdown. You're already seeing consumer spending pull back. But here's the interesting thing about consumer spending. You're pulling back in some areas, but you're not in others. Do you know what it is? Anyone? So Walmart came out 60%. 60% of their gross sales were from groceries. Just pause and think about that. You should see the chart. The chart looks like this for the retailer, just for online groceries, because they're crushing it, they're taking over. And by the way, from Walmart to Target to Amazon to all these, you really got to price check. Because I was noticing this weekend, my goodness, something at Amazon was double the price at Home Depot and all these other places. So fun fact, check. Don't just go with Amazon all the time, telling you on certain items, you're paying double. I don't know what it is. Somebody should create a site that's like shop all and we shop them all. But anyways, where are you spending your money? You are spending your money on food, essentials, but where you are spending your money is on airplane tickets, hotels, experiences. You're spending your money on experiences and food. What you're starting to slow down on is couches, TVs, appliances, all that audio stuff, whatever that is, non-essential, that is starting to slow down. Reebok, you saw their sales plummet. Burlington Coat Factory plummet. Why am I saying this? Because these are big indicators. These are big companies that have a big presence out there, and they're down because you guys already bought your shoes, you already bought your jackets, you already bought your TVs, your laptops, your computers, all that crap that we probably didn't even need. You already bought it. You probably already bought a car, right? You haven't bought a house yet, but you're now still want to spend your money on going to concerts, restaurants, vacation, all that stuff. It's still active. You're still there. So consumer spending is definitely going down, but they're still spending on there. That's why Vegas is probably still pumping. San Diego, we're still doing pretty good here. I feel like, our VRBO, our short-term rentals are doing pretty good, where people are coming. But before I end here, I think hopefully we'll see some rate pullback when this debt ceiling debacle drama ends. They're gonna come with a deal, they have to. They're either going to extend it another couple of weeks, which they don't want to, but they might just say, let's extend another week and fund the government for a week and then kick the can down the road. But they're always kicking the can down the road. It's like, why can't you guys just come up with something and stick to it? But it never is. It's like, you're giving your kids the credit card and they just keep spending and then we're just paying the minimum payment, right? But I have a great story for you. And this is the reality we're living into real estate market. So I was literally just on a call, call the agent and I said, hey, look, how many offers do you have? Because we're going to submit an offer on behalf of the client. So I was calling she wants me to get pre-approved with her other loan officer, no problem. And I was like, let me just call and see where they're at. Pick her brain a little bit, throw out what we think we're going to offer or wasting our time. So the property is listed for 850. Clients were going to offer 870. So we're like, hey, am I wasting my time? And she goes, let me just stop you right there. Number one, I appreciate you calling me, asking me this. They have 14 offers, pretty good. Property's just listed a week ago. She's like, I have all cash offers. I have an offer on the table, $1 million. No contingencies, 10-day close, 50% down or all cash, whatever. She has another $1 million offer, multiple offers over 870. So what did I do? I called the agent. Let's not waste our time. Go back to the team, start looking for the properties. 850, selling for $1 million. This is what happens when you have no inventory. Rates are even high, not as high as they were, and this is still people are buying because people are buying now because if inventory doesn't improve, they're going to just refi out when rates come low. But if you're waiting for rates or anybody, I'm just letting you know, and I get it if you are, it is what it is. If you're waiting for rates to go to 5, right? Or go down a point and you're basically having inventory this low. So if rates go to 5 and inventory is this low, this home, I'm telling you guys, it is going to be crazy because from the rates today to 5% on some of these scenarios, you know, point and a quarter, point and a half, whatever the rate's going to drop, right? Let's say a full point or more. You're talking $500, $700, $800. That's an entry level. $1 million mortgages. You're talking thousands of dollars. That is going to factor in. That's going to hurt. And where is the inventory going to come from? So I mentioned housing 2.0, the crisis. Let me end with this. The housing crisis 2.0 is low inventories, housing crisis 1.0. We don't have enough. 2.0 is on top of that. People are locked in at, 1.875 in a 15-year, 2.5 on a 30-year, 2.75, 3%, whatever it is. Their payment's fixed at $3,500. They can rent their house out for $5,000, $6,000. So instead of selling the house, taking that money, putting that property on the market, they're just going ahead and they're like, you know what? We're just going to keep the house. We're going to rent it out. We're going to cash flow it. We'll come up with a less down this new place, put the money down, and they're going to offset with this cash flow here, offsets the mortgage here. And you know what? They accidentally became a real estate investor. They weren't planning on this. They didn't know this was going to happen, but they're like, why am I going to sell this? And plus, if they're married or not married and they made more than $500,000 of equity, which could be true, and they're going to pay the capital gains, they're like, you know what? We'll keep the house, we'll rent it out, and we'll cash flow it, and we'll go buy a new home, and we could put, 5, 10, 15, 20% down, whatever they have, they'll figure it out. Maybe they'll tap an equity line and refi that out later, whatever. That is housing crisis 2.0. It's happening. So people are not listing their properties, they're renting them back out, they're going out there buying another one. So what that person does is there's no panic, there's no rush. So when they basically find another house, they can move out slowly, they can, do this. They're not in a rush to get out with a new buyer coming in. It's less time, less stress, plus the cash flow. It's a win-win for them, but it's not a win-win for the market. It's causing too much problem. So that's it, guys. I don't know. Where is the inventory? You guys, is anybody going to bring it? Because we don't have it. And 95% of rates are under 5%, 50% of rates are probably under 3%. It's just a problem. It's a real crisis. It's not getting better. We're coming in June. We should have 4,000 or 5,000. I thought at least this year listed. We have 2,300. That's not even a good cycle. So look, if you're waiting around for rates to drop, that's a good thing. But I'm telling you, if we don't get inventory, it's actually going to be a problem and a real bad thing. So if you're refining, your values are probably going to go up. It's going to be a good opportunity. If you're buying, you're going to be in a bigger line, more competition, overpaying. That's it. There's no way around it. So thanks for watching. Please share. Until next week, we got some entry reports coming out this week. Not much data on the forefront. Memorial Day weekend. So I will catch you guys next week. Have a happy, safe weekend. Don't get too crazy, and let's keep watching this market and see what happens.